The most important earnings report of the year is 1 week away, and if Tom Lee is right, what Jensen Huang says next week could either ignite the biggest rally of 2026 or confirm every fear the market has had for months.
Does Nvidia earnings 1 week from today hold the key to the whole thing, just given the fears about AI and the spend? And we need to get the results. We need to hear from Jensen Huang.
That could set the bottom.
That's Tom Lee. And he's not being dramatic, he's being precise. Because right now Nvidia isn't just a chip company, it's the linchpin of the entire artificial intelligence trade. And the entire market is waiting to see if that trade is still alive. But here's what most people aren't talking about. Tom Lee didn't stop at Nvidia. He laid out a full picture of where the market actually stands right now. And the setup he's seeing is unlike anything we've had in the last 10 years. Because right now the market is sitting on a knife's edge. And one earnings report could be the difference between a full recovery and another leg down. If you've been watching the markets lately, you know things have felt off. Stocks have been choppy. Sentiment has been negative. And it's hard to tell whether this is just a healthy pullback or something more serious. Tom Lee broke it down simply. There were 3 things that hit the market at the same time. First, a major sell-off in software stocks. Second, a rotation out of the biggest tech names, what Wall Street calls the Magnificent Seven, and into defense companies, the so-called bullet makers that are seen as safe bets during times of tension. And third, a general mood of fear across the market, which pushed investors into gold and away from anything risky. That combination created the mess we've been living through. But here's where it gets interesting. While all that was happening on the surface, underneath it something surprising was going on. Earnings, the actual financial results from American companies, were coming in strong. Really strong.
I think the stocks haven't reflected that because we've had a huge beat, a large percentage of companies beating. It has shown up, I guess, in small caps.
Think about that for a second. Companies are delivering. Profits are growing. And yet the market is still struggling. How does that make sense? Tom Lee has an answer, and it goes deeper than most people realize. Here's the concept that unlocks everything. There's an old saying in finance, it takes a whole lot of earnings growth to offset a drop in valuations. What does that mean in plain language? Stock prices are built on 2 things. How much money a company is actually making, and how much investors are willing to pay for each dollar of those earnings. When investor confidence drops because of uncertainty, fear, or geopolitical risk, they become unwilling to pay as much. That's called multiple compression, and it can wipe out the benefit of strong earnings almost entirely.
There's this old adage that it takes a whole lot of E to offset PE, meaning you're right, the earnings have been good, but things that have affected multiples are what's causing the market to come in. The AI, a new Fed chair, potential war.
A new Federal Reserve chair, artificial intelligence disruption, the threat of war. Those 3 things alone are enough to rattle any market, and right now, all 3 are sitting on the table at the same time. But here's what Tom Lee is saying that most people are sleeping on. The fundamentals are actually fine. Earnings are the anchor. And once the fear settles, stocks will re-anchor to those fundamentals and move higher. The market hasn't broken, it's just scared. Now here's the question that should be on every investor's mind right now. If the setup is this good, what's actually going to trigger the turn? And this is the part of the conversation that gets really interesting, because Tom Lee didn't just say be patient. He identified 3 very specific trades that he believes are about to explode, and the data behind them is hard to argue with.
Not yet, but we're maybe 90% of the way through that, because I've seen some of the positioning data. So we know on for instance, prime brokerage, Goldman data, software ownership is multi-decade lows.
Multi-decade lows. Let that sink in. Professional investors, the hedge funds, the institutions, the big money, have pulled out of software stocks to a degree we haven't seen in a very long time. That kind of extreme positioning doesn't usually last. When everyone is on one side of a trade, the reversal can be violent and fast. But that's not the only signal. The Magnificent Seven, the biggest technology companies in the world, are now trading at a lower valuation than the defense and weapons manufacturers that surged during the rotation. Tom Lee pointed out they're sitting at a 3-point discount on price to earnings ratios. In 10 years of data, this has never happened. Not once. And then there's crypto. Bitcoin and the broader digital asset market have already drawn down roughly 80% of what you'd typically see in a full crypto winter. Historically, that's the zone where smart money starts accumulating, not selling. 3 trades, all stretched to extreme levels, all potentially coiling for a major reversal. Tom Lee is saying we're 90% through the pain. The setup is almost complete. But here's the thing. None of those trades fully activate. without a catalyst. And right now, there is one event standing between where the market is and where Tom Lee thinks it's going. Nvidia earnings.
Does Nvidia earnings 1 week from today hold the key to the whole thing, just given the fears about AI and the spend? And we need to get the results. We need to hear from Jensen Huang.
That could set the bottom.
Jensen Huang, the chief executive of Nvidia, one of the most watched figures in markets right now, because Nvidia isn't just a chip company anymore, it's the backbone of the entire artificial intelligence build-out. Every major technology company in the world is buying Nvidia's hardware to train their artificial intelligence models, and that spending has been the engine behind a massive wave of investment. But the fear is this: what if that spending slows down? What if companies start pulling back on artificial intelligence infrastructure? If Nvidia's numbers disappoint, it doesn't just hurt Nvidia's stock. It sends a signal to the entire market that the artificial intelligence wave might be cresting. That's why next week's earnings report carries so much weight, and that's why Tom Lee called it the key to the whole thing.
Because, if you look at the software index, this is like the 8th week of a pretty severe downturn. So next week, as you know, sometimes 9 is a big number, turning point. That could mark the bottom for software.
8 consecutive weeks of selling in software. Week 9 could be the inflection point. If Nvidia delivers, if Jensen Huang gets on that earnings call and confirms that artificial intelligence spending is still going strong, it will be a signal to the entire market that the fear was overblown, that the sell-off was emotional, not rational, and that the recovery can begin in earnest. The earnings season has been strong. The big technology companies are cheap relative to defense stocks for the first time in a decade. Software is hated. Crypto is near historic lows. And Nvidia is about to report results that could flip the entire narrative. The people who panicked and sold are going to be the ones watching from the sidelines when this thing turns, and it might turn faster than anyone expects. The question isn't whether the recovery happens. According to Tom Lee, it's just a matter of when. And right now, when might be closer than the market thinks.